Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call and we're coming to you as always from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me, Nigel D'Souza and Manglam Malu. As you can see, we are in full festive fervor, ready to cheer on, irrespective. Markets go up, markets go down. Sometimes it's red, sometimes it's green. But bura na mano, guys, because Holi hai.
Yes. You know,
good morning.
The week
Almost.
started with India winning the Champions Trophy, so Burana Mano Kohli hai, and now we end with Burana Mano Holi hai. But you know, be that as it may, markets will do what they do.
Yeah.
Life is nothing without color.
Absolutely.
And we out here, for all our viewers, wish that your life is full of all sorts of color. The red of love, you know, the green of gains, the blue of not always it's good, right? So the blue of sometimes nervousness as well. That's great. Then you have the black to take away all the nazar, the white of peace. That's all we want.
Well, that's right. And there's a long weekend as well coming up. So let's get through with today's trading session and get off to the holy celebrations as well. So spend time with the family and lots of love to all of you. But Surabhi, you started off overnight cues not looking too bad. We got our markets to get through, and then in fact we get to the celebrations. So let's get straight to that.
Absolutely, and I think the celebrations have kind of begun because, frankly, I mean, in a week like this, which has been such a hectic, crazy roller coaster in terms of headlines, local, global tariffs, at the end of it all, we managed to consolidate. We managed to hold our own ground, and that's not a bad thing at all, one would have to say. Now, overnight cues, very, very quickly, there is some pullback in US equities as well. Yesterday, it was a little mixed on Wall Street, but nonetheless, you had the Nasdaq moving higher, the S&P 500 moving higher. The Dow still ended with a mild red. Now, why is that? Two reasons. One, because those beaten down tech stocks, they're getting snapped up big time. And that again kept the bid going on the NASDAQ. So, you know, you had names like Meta, AMD, Nvidia. All of these stocks were up anywhere between 2 and 7%. Then Intel was surging higher. It was actually up 11, 12% in after hours trading. And that's because Intel is going through a management change. They've got a new CEO. The street seems to be happy with what he can bring to the table and maybe just come up with a turnaround strategy. Not just that, on the macro front, the good news came in the form of inflation. There was so much worry going into this consumer inflation number in the US because of all the stagflation worries. Well, for what it's worth, at least the latest print, the February print, is lower than estimates. So up 0.2% month on month, the estimate was 0.3%, up 2.8% year on year, the estimate was 2.9%. And the markets heaved a sigh of relief, both on the equity front and even on the dollar. And the yields. Speaking of the yields, there was actually a bit of an inch up on the US 10-year and the 2-year. Now, you'd wonder why. That's because this was just basically a bit of risk coming back in the market. Risk aversion had driven down US yields, the 10-year yield to 4.1% earlier this week. But now as things are looking a little better, the market's finding its feet. The stagflation fears are at least receding for now. The yield was moving slightly higher. In fact, the dollar managed to find its feet as well. Dollar slightly above. I mean, the dollar index at that level, it's still very much range bound between 103.6 to 103.7. But if you're looking at it from an individual currency perspective, then finally the dollar had some respite against both the yen and the euro. These two currencies have been surging through the week. Yesterday, the dollar managed to gain about 0.3, 0.4% versus the euro, managed to gain about 0.2% versus the yen as well. The dollar-yen, remember, the euro-yen, the euro-dollar equation went up to 1.09 earlier this week. Now the euro has cooled off. It's come down below that level. So that's on the currencies front. But all is not really well on the tariff front. So while we're very excited about the good news and the celebrations, let's keep our eye on the ball as well, because that tariff news is still coming in. Retaliatory tariffs have now come in from Canada as well as the EU. Canada is talking about $20 billion in terms of retaliatory tariffs on US. The Eurozone yesterday spoke about $28 billion in terms of retaliation. So those tariff headlines, well, they've just paused, but it's never over, so to speak. But anyway, we'll take it for what it's worth. Good news back here for us in India as well. We've got a macro bonanza lined up in the form of lower consumer inflation and higher IIP. Consumer inflation is at a 7-month low. IIP is at an 8-month high. And consumer inflation has fallen, with food inflation finally falling, which is great news, which is where the stickiness really was. And on IIP, manufacturing is looking much better, 5.5% on manufacturing. That's the kind of growth, and we haven't seen that in a while. And we'll get you more on this data as we go along. So good news coming in on the macros over here. Like I was saying, I mean, in the midst of all of this, the market's done okay this week. It's consolidated. The Nifty is down barely 0.3%. Mid-cap index has fallen a little more, 1.4%. But we managed to hold our ground, which is why I am watching out for whether the market today decides to get into holy color and whether that color can indeed be green. We have good news on the flows front as well. FPI flows, we'll talk more about that. But as I see it, guys, it's been looking good today. Global cues, local cues, and that good feeling as you're getting into the long, holy weekend.
Well, that's right. And a couple of factors that have also played out. The SIP number wasn't too bad. It held steady at around 26,000 crores. And also, when you come back next week, I won't be coming back because I'm on a vacation. But next week, those advanced tax payment numbers will also be out of the way. Normally, the first half of March, you see some kind of pressure because the advanced taxes as well do get paid. So that as well will be out of the way. So taking stock of things, the economic data, as you mentioned, is fairly good. The question is, can the Nifty go ahead and conquer that crucial 22,700 mark, which is importantly the resistance mark that we are looking at. So economic data, both on the domestic front as well as on the global front, at least as of now, looks pretty good, with inflation very much in control. Overnight, the cues as well pretty good. Brent crude price as well, BF dollar index, the yields as well, no worries on the troika. So that gets a thumbs up. What did the FIs do in yesterday's trading session? Well, on index futures, they added some shorts. So the swing factor is close to around 4,000 contracts approximately, because they added shorts and they unwound some longs. The net short positions continue at around 82% or thereabouts. And in absolute terms, the FIs, they are net short, close to around 1.8 lakh contracts over there, with the swing factor of close to around 4,000 net short contracts were added, while the clients, they added 4,000 net long contracts in yesterday's trading session. That's why it moved from around that 1.38 lakh to around 1.43 lakh odd. But the FI action in stock futures as well is something that you should keep an eye out on, because they sold in the cash market, that's correct, but they are also buying stock futures. It appears there's a bit of an arbitrage that's going place, and if you look at it in contract terms as well, they added more long positions, close to around 4 long positions on stock futures for every 1 short position as well. So selectively, there are a couple of stocks out there that are going to do well irrespective of what the headline index does. Moving to the options data, today, remember, is the weekly expiry. So options data becomes very important. 22,550 call, 22,600 call, both of them were fairly active in yesterday's trading session, which brings us to the levels. The important mark on the upside, what we're looking at, the 20 DMA, that's at around 22,619. Yesterday's high is important. So this becomes the crucial resistance zone that you're looking at, 22,570 to around 22,620. While on the downside, yesterday's low becomes a reference point. Last couple of trading sessions, we have gone to around 22,300 and bounced off that. So that's going to be important. Since the dollar index is softer, the fears of stagflation have cooled off a little bit from the United States. And you have, economic data that's looking pretty okay, at least the cues that we have. The IT index has got smacked. That's seen a big correction from the top. Yesterday as well, it was under pressure. The Nasdaq did well. I'll keep an eye out on the IT index, whether or not it can bounce back today. And since the dollar index is softer and, most metal prices are higher, I'll keep an eye out on both these two. Global facing themes, keep an eye out on both these two. But the Nifty Bank will have to do bulk of the hard work to take us higher from here on. Let's see whether or not 22,700 can get conquered. Mangala.
Well, for me, the most important thing is what are the bulls doing from lower levels? Yeah. And 2 data points really stand out. The fact that over the last 2 trading sessions, we've seen recovery from the lows. How much was the recovery? 150 to 180 odd points. If you look at, March 11th, the low on the Nifty, 22,315. From there, we closed about 183 points higher. Yesterday, the low on the Nifty, 22,329 thereabouts. We recovered about 141 points from that. And both the days, we had factors that dragged the market down. On day 1, we had the weakness that came in from Nifty Bank, led by IndusInd Bank. And then yesterday, it was the IT index that dragged the index. And both these indices will be in focus today. Why is that? Because overnight, we saw the recovery in Nasdaq, so IT stands supported. Secondly, the double delight that came from the macro front. Lata will talk about that, lower than expected inflation, better than expected growth. That should support the banking index as well. So both these factors will work well for the market. And as a result of which, let's see, the GIFT Nifty is indicating a positive start up to 50 odd points. Can we build onto that or not would be the big question. No real worries coming in from Wall Street, minus the slight dip that we saw on Dow Jones itself. And then the other part is, when there is no worry coming in, is there fear which is taken off? Yes, the CBOE VIX was down about 10% overnight. So that's another positive. And the next week, there is the Fed meet, and out there, no rate cut is expected. In there, the commentary will be extremely crucial to track. Back home itself, the FI sold in cash market 1627 crores. We're used to seeing 2,500, 2,800, 3,000 crore worth selling by the FI. So 1627 crores, we can totally manage. No real worries about there as well. And then we have the weekly options expiry. Yes, it is a Thursday. Tomorrow's a Friday. It's a long weekend. It feels like a Friday today, but don't lose sight of the fact that there is the weekly options expiry. Option writers are positioned for a 22,325 to 22,585 sort of broad range. When the lows on the market are protected, typically the indices that rally the most are the broader market stocks. Over the last 2-3 trading sessions, the mid-cap and the small-cap indices have been underperforming. But all things working in favor of the market when it comes to recovery from the lows, can we see an outperformance from the mid and small cap index? Can we see better advanced decline ratio than what we've been seeing over the last couple of trading sessions is something that I'll be tracking very closely.
Absolutely, Abhin. And the fact that we've got good local news, that should really cheer sentiment today, because a lot of this correction was triggered by local slowdown, not just the international headlines on tariffs. So let's actually